Good morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer at Worth Asset Management. Today is Tuesday, February 21st, 2023. Yesterday was President's Day. The markets were closed. They're back open this morning. So let's go over your top three threes for the week. Let's go over our major asset classes, their performance, and our top three favorite on a long-term basis. And then we're going to dive in on the short-term basis on both equities and bonds to see how we're positioned. Then we're going to go over our top three market movers for the week. So let's jump on in.
Okay, let's go over the major asset classes, their performance on a week and on a 1 year basis. Right now, it was a mixed week. We had a few things up and a few things down. The US dollar was basically flat up 25 bips. The bonds were down about 0.5%. The S&P was actually slightly negative, while the NASDAQ and Russell continue to move a little bit higher. International real estate, gold, and commodities were also slightly down. Bitcoin was the big winner, up 13.6 for the week. However, if you zoom out, they're still down over 44% on a 1 year basis. We have the US dollar and commodities as our two positives, while everything else is slightly down or double digits on the negative side. All right, let's go over the top three major asset classes on a long-term basis. There was no change for February 21st, 2023. We still have T-bills, mid-cap equities, and dividend equities as we have this battle between offense and defense still brewing. All right, let's go over our positioning for bonds on the short-term basis. And again, we are positive on the short-term basis. We started nibbling back in middle of November, and so far so good. We've got a nice formation here, higher highs and higher lows. From that time, we're up about 2.7, but we've got to have this level here stay above 97. Otherwise, that's going to reverse the trend and start possibly heading down. All right, let's take a look at our positioning for equities on a short-term basis. Again, we are positive on the short-term basis for this particular equity, the S&P 500. We started nibbling at the beginning of this year, and so far so good. We're up 4.7 on that particular. But again, as we have stressed, we like the formation. We're seeing higher highs and higher lows again. But we've got to get by this 4,100 to 4,200 resistance zone. And we literally went right up to the top of it and then sold off. And now we are actually trading below that resistance zone. And so this is not only the first time we've done this, we did this towards the end of the year. We also did this back in the summertime where we just kind of chopped and traded around in that zone. And that's probably what we're going to end up doing until we get some news, until we get some more information from the Fed. Is inflation tamed? Is everything over in China, Russia, Ukraine? Have they all been handled? Lots of things that we've got to get some clearer answers on before we can probably either break on the upside or possibly the downside. So we're going to have to continue to watch that. All right, let's go over the top three market movers for the week. All week, we still have our corporate earnings reporting. This morning, we'll have Walmart and Home Depot, which will give us the look at the retailers. And then we'll also have NVIDIA, Alibaba, Coinbase, and Moderna, among quite a few others reporting this week. The number two market mover of the week will be the Fed meetings minutes from the February 1st meeting. And why this is important, because it's going to provide insight into what the governors are thinking about the future trajectory of interest rates. And what they're specifically going to be listening to or looking for in that report is, are we at 25 basis points, or were there a number of governors that were wanting to do 50 basis points at the next meeting? So that could be a market mover, and that will be out on Wednesday. The third market mover for the week will be the Personal Consumption Expenditure Price Index, or PCE. And again, remember, that's the Fed's preferred gauge for inflation. And just like what we saw at CPI last week, it is projected to have risen last month, going up 0.3, where it has been coming down for consecutive months, and this will be the first one going back up. So again, that's kind of putting a little bit more pressure onto the Fed. So that is why Wednesday, what they're going to say on Wednesday will also reverberate and kind of be listening to on Friday. So two big reports that are coming out this week that could move the market. All right, here's a listing of those corporate earnings that we'll be reporting this week. So you can take a look at that. And if you've got a few in your portfolio, you can find out when they are reporting. That's it for this week. Thank you for joining us. Our next update is Monday, February 27th. As always, continue to like, subscribe, and comment, and we shall see you next week. Have a great week trading.